So in this video, we're going to be talking about Lemonade and their fourth quarter earnings report that they just reported earlier today. And we're going to talk about why the stock fell after they announced earnings. And then we're going to focus on what did they say during the earnings call. And we'll talk more about the company as we move forward into the future. Is it a good company to stay invested in, or do you need to take your money and run? We'll talk about all of those things as we go into this video. But this video is going to be broken down into three different categories. The first category, we're going to talk about what actually happened that caused the stock to fall. Then we're going to focus on the annual shareholders letter that was sent out before the earnings call. And then I have some notes about the comments that they made during the earnings call. And then finally, I'll just give you guys my thoughts on the company moving forward. So if you're ready for all of that, and if you want more of that, let's get this thing started. All right. Whoosh. What's going on, people? It's your boy Kalichi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we talk about on this video, hit that like button. Turn that thing blue. But anyway, in this video, like I said earlier, we're going to be talking about Lemonade, focusing in on Lemonade. If you don't know what Lemonade is an insurance company, and it's trying to disrupt the way that we do insurance. As you guys know, if you have to buy insurance, it's not necessarily the nicest thing around. And so Lemonade, it feels like it has the formula to be able to disrupt the insurance industry. And it says it has three key things that it's going to be able to use to disrupt the industry. The first one is instant everything. In other words, when you sign up or want to sign up for a policy, it's going to be very fast. As a matter of fact, they said that you can sign up for a policy in under 90 seconds on average. You can sign up for a policy in 90 seconds. And then when you have to file a claim, you can do that in 3 minutes. So that's the first edge. They're using AI and a robot called Maya on their app for you to be able to sign up for policies and have your claims filed very, very quickly. The second part of it that they have is incredible prices, because Lemonade is more slimmed down than your typical insurance companies, than your typical insurers, where it doesn't have all kinds of insurance brokerages everywhere, where you have different people all over the place if you want insurance. It makes it a lot simpler. In other words, it can keep costs lower. And so prices for Lemonade are extremely low. And plus, Lemonade takes just a flat fee. If you look on the screen, it says that Lemonade reverses the traditional insurance model. We treat the premiums you pay us as if it's your money, not ours. With Lemonade, everything becomes simple and transparent. We take a flat fee, pay claims super fast, and give back what's left to causes you care about. So basically, Lemonade takes a portion of what you pay to them. They keep it to be able to run their operation and to get a little bit of profit as well. And then the rest of it is basically seen as for whatever claims that people may have. And then if there's anything left at the end of the year, Lemonade actually pays that towards charities that you care about. As a matter of fact, year over year since Lemonade got founded, they've been able to pay up to $1.1 million to charities. They started out in 2017 just paying about $53,000, and that has gone all the way to $1.1 million that has been paid to charities. And you guys know me. Generosity is something that's very important to me. I mean, it's something that we say on the channel all the time. So to me, this was one of the reasons why I was like, whoa, hold up. And plus, I also found out that they are a certified B Corp, which means they have to be doing something for society. It's not just like a nonprofit. They actually need to be doing something for society. So when I first found out about Lemonade, I was like, wait, hold up. For real? Y'all for real? And so I dug deeper into Lemonade. But anyway, let's just get started on this video. The first thing that most people want to hear about is, why is the stock falling? And I'll tell you the reason why. It's very simple, actually, because Lemonade gave a forward guidance that was lower than the expected of most analysts. Most analysts thought that Lemonade will say by the first quarter of this year, we would be making more than, I think they said that it's going to be about $21.5 million to $22.5. Analysts were predicting that it will be way higher than that. Now, part of this is because of the way the market is right now. Everyone has been putting all kinds of numbers, like crazy numbers out there. I mean, as a matter of fact, when Lemonade went public, it kind of was flat for a while. And then all of a sudden it doubled in price overnight. It was just like bang, bang. And it went from $60 to $180. And it has since fallen from $180 in January down to about $110 as of today. With all that being said, there was a lot of enthusiasm being infused into Lemonade. And so when Lemonade brought everybody back to earth, like, hey, this is what we expect to make at the end of the first quarter, everybody was like, what? and then people started selling out, and it kind of ended up being like a self-fulfilling prophecy where the first few people sell out and then more people sell out and more people sell out. What does that mean for the company? I don't really care too much because, as you guys know, I'm a long-term investor. I don't really care about the short term too much. What I'm focused on is what is Lemonade going to become in the next 5 years and the next 10 years. That's what I want to know about. That's why we got to dive a little bit deeper into the numbers and into what Lemonade is as a company. And we'll talk more about that as we go into the second part of this video, which is just going over the shareholders letter, the annual shareholders letter for 2020 and some of the numbers that Lemonade poured out and put to us. So the first thing that I want to go through is just everything that they did year over year numbers, just showing us how well they're doing. This is kind of like the time for a company to show off. So they give us all their numbers like, hey, we increased our in-force premiums. By the way, in-force premiums is basically people signing up and the premium that they pay every single month to the company. It said their in-force premiums went up about 87% year over year, going from $114 per customer to about $213 per customer, which is very good growth. Also, their number of customers went up 56% year over year to 1 million customers, which that's good numbers. We'll add more color to all of that stuff as we go deeper into the numbers, just looking at it. Also, their gross earned premium, which is the amount of money that they made off of the premiums that were being paid. Remember, Lemonade takes a small little fee from every single premium that's paid. They made $50 million, which is a 92% increase. Also, their annual gross loss came off. Gross loss is basically how much it's costing them to operate the business. So let's just get right into let's just get right into the shareholders letter. I love the fact that they started off the whole thing kind of funny and kind of loose and kind of interesting, because I'm tired of reading annual letters where it just feels like I'm reading a freaking textbook. Like, come on, add a little bit of color, add a little bit of fun. I love Lemonade for that. And we'll talk more about what they did during their earnings call. That was just, it was so unbelievable. It's just made every retail investor feel nice about owning Lemonade stock. But anyway, it says, in recent quarters, we attempted to walk and chew gum at the same time, and we're happy to report that we seem to have mastered this feat without too much drama. We offer 3 very different types of insurance products. At the beginning of last year, Lemonade basically only offered, I think it was home and renters insurance. And then later on in the year, they added on pet insurance, pet health insurance, and term life insurance. It said they offered 3 very different types of insurance: property and casualty, pet health, term life, and have more in the works. So that's kind of foreshadowing of what they have for the future for us. In fact, while Lemonade was available in 27 states at the time of our IPO, we now offer at least one of our products in all 50 states of the United States. To me, that just says they're growing. They still have a lot of room to grow, and it's going to be interesting to watch this company. In-force premium increased 87% year over year. We already talked about this, about to 213 million. But the more important thing is it took USAA, which is another insurance company, 47 years to get to 1 million customers. They are growing 5 to 10 times faster than the biggest and best incumbents, and it emboldens them to lean in on the opportunities they've identified. Basically, Lemonade is growing extremely fast, faster than the norm, faster than most other insurance companies grew at the pace at where Lemonade is, which is awesome. And we'll talk more about why Lemonade is able to grow this quickly. They also completed a follow-on offering in Q1 2021, raising about $640 million to add that to their cash balance. So now they have about $1.2 billion in cash reserves. And so this is just so they can keep investing in the business. One of the things that they kept talking about on the call that we'll talk about in a short while is that they're so hyper focused on investing in the business that they've hired more engineers to help them with all the data. Because one of the biggest things for Lemonade is data analytics and getting all that data to ensure that they're providing the feedback and to ensure that they're getting the right kind of customers to work for them. And then finally, they start talking about the product. So they say, we continue to focus on diversifying our product mix, with non-renters accounting for 1/3 of total in-force premiums in Q4 of 2020 compared to a quarter at the end of 2019. The big thing you have to notice when it comes to Lemonade started off just offering renters insurance. That was the way they got started. They actually started, I believe it was in New York, where they were just offered renters insurance. And if you've been a renter, you know renters insurance sucks from most businesses because it's not a whole lot of money in it. So for big insurance companies, they don't care about renters insurance. I remember when I was trying to get renters insurance, the only one that was like really being offered was like e-renters, and that one sucked. So this was like a market space that was just wide open for Lemonade to come in and dominate. Now, the beautiful thing that Lemonade has done since then is they've used that opportunity to spread out into other kinds of insurance. They talk about that homeowners and pet insurance represented more than 40% of their new business in Q4 of 2020, which is up from a third in Q4 of 2019. If you don't know what a third is, that's 33%. That's really good growth. And then the key thing for Lemonade is how they view their customers. They're not just viewing their customers as like, oh, we just add you on. What they're looking at is the lifetime value from their customers. In other words, their customers going from owning an apartment to owning a home to owning a car to owning more and more and more things. So Lemonade wants to grow with its customers, which is why they've been able to grow this number, their in-force premium, from 45 million in 2018 all the way to 213 million, which is really good to see. They're also the interesting thing is because they're looking at acquiring customers from that are kind of starting off life. So customers like me, who's kind of like, I just graduated from college. I'm just living on my own now. I need renters insurance for the first time. That market space was wide open. And so because that market space was wide open, their customer acquisition cost is relatively low. So they said that each dollar they invested in advertising in 2020 delivered about 88% more in-force premium growth than in 2019. This was largely due to stronger brand awareness. We're going to talk about that in a second, and a technology-driven conversion funnel that continues to get smarter. One thing you got to pay attention to, especially when it comes to companies that you want to invest in, brand is key. Brand is key. I talk about it a lot when it comes to like companies like Airbnb. The fact that Airbnb is now a verb is very important. So if Lemonade has built their brand to such a position where they're able to not necessarily have to spend so much on advertising costs to be able to acquire new customers, that is key to be able for Lemonade to be able to continue to grow. Because one of the reasons why Apple is because of its brand. And so if Lemonade is starting to steal away, I mean, one of the things that I like about Lemonade is the way people talk about Lemonade. As a matter of fact, Lemonade has almost a 5-star rating on Google and Apple stores. And it actually gets like some of the highest rated insurance. People don't like insurance. It's rated in the same rating as like Apple and Nike, that people really love the company. So if Lemonade can keep on building that brand out, keep on demonstrating that customers can trust them, keep on demonstrating that people can trust who they are, and keep on demonstrating that they are there to help people out, Lemonade is going to continue growing as they have grown so far. Also, they have term life insurance now, but that wasn't launched until late into the fourth quarter of last year. So a few things to take notes of how they've been growing so far. They said in Q4 2020, we once again saw robust growth in graduation. Graduation to Lemonade is when renters become homeowners, and increasing their premiums 6 times of about 250% year on year, significantly outpacing the growth of our overall book of business. So that's really good news. Really good news if you're looking at Lemonade as like, okay, are they actually growing? The only question I have when it comes to this is, was a lot of the growth pulled forward due to the coronavirus, as a lot of people started flocking away from cities and renting into the suburbs. So as we all know, there's been a massive spike in houses being bought. So was a lot of their growth pulled forward? And so is their growth rate going to slow down now? That's a question that was in my mind the whole time. And I was hoping that somebody on the call would ask that question, but nobody really asked that question. And that if I ever get the opportunity, maybe one day get Daniel Schreiber, who is the CEO of, I don't even know if I'm saying his name right, but Daniel Schreiber, to be on my podcast, I would love to ask him a few questions. That's just one of the questions. And we'll talk more about the questions that I have at the end of this video. Also, another key stat to pay attention to is for the full year 2020, our gross loss ratio was 71% as compared to 79% in 2019. It's always good to see them stop losing as much money and start making some money. In prior periods, our total loss ratio was consistent with our US home products loss ratio. Throughout Q4, an increasing percentage of our premiums and claims came from new products and new geographies, a trend that is set to continue. This shift is important. The loss ratio of customers in the first year of their policy is typically higher than that of subsequent years, a phenomenon known as the new business penalty. For example, at Lemonade, we see a 15 to 20% higher loss ratio for year one renters as compared to year two. The new business penalty is at its most pronounced with recent launches. So that's recent launches of pet insurance and term life insurance. This is compounded by the fact that for new products and markets, by definition, we have no history, and so our data sets are partially to non-existent. For these two reasons, you expect our new products and markets to have higher loss ratios in their formative years, and indeed they do. So the main thing you have to think about for Lemonade, like we said earlier in the video, one of the reasons why they can offer such lower rates is because they can get so much data from people. And because they can get so much data, they're able to know who they want to basically as customers and who's going to cost them more and who's going to cost them less. However, when they expand into a new market, they don't have that much data yet to go off of. They don't have enough data to be able to build the models that they need in order to make sure that they're acquiring the right kind of customers to be part of the system. And so they're going to lose a lot more money in the beginning when it comes to new products like their term life insurance and the pet health insurance. And so when you put those two things together, you can show that despite all of that, they still had a 71% loss for the year. But if you look at the fact that in the third quarter, when you compare the third quarter of 2019 to the third quarter of 2020, it wasn't that much of a difference. It was 73% to 73%. So they didn't really see that much of a difference. And that's more due to the fact that it's a new product. So all of those numbers are going to spike for a short while. New business penalties dissipate when the business is not new. Obviously, and our systems have a track record of turning data handicaps into data advantages fairly fast. And we can see that with the year over year growth, with it going down from 79% to 71% year over year. That's good to see. And we'll see how that goes on because they are talking about adding more versions, or rather more insurance policies onto their system. So we'll see if that number stays in that 70-ish range, because I'm predicting that number needs to go to about 60 to 70 range. It needs to stay in the 60 to 70 range for it to make sense in the business. Now, finally, just looking at some of the key numbers that they dropped on us. They grew from 643,000 customers to 101 million customers, which is a 56% increase. And then their premium per customer, which is the number that we're going to be focusing on most of the time to see and make sure that their premium per customer should be growing. Because if more people are graduating from being renters to being homeowners and they're staying longer with Lemonade, that number should grow from 213 over time and should go probably higher into the 500s. I'm predicting that in the next five years, I'm saying that number should be in the 500 range. They're predicting that at the end of this year, we'll look at their numbers, will be about 300 million. So we'll see how that plays out. They're predicting faster growth than I have actually predicted for them, which is crazy to just think about. And then finally, they talk about the revenue. The thing about, and this was one of the reasons why a lot of people rushed out of and sold out of Lemonade. But you have to, one thing I love to say is numbers never lie, but they never tell the whole truth either. So you have to dig deeper. And the reason why there was a loss in revenue was the way that they started paying back their reinsurance. Basically, they said our proportion reinsurance agreement went into effect at the beginning of Q3 2020, increasing the proportion of premium that is seasoned. This drives the year-over-year decline in revenue. So the amount they had to pay out for reinsurance changed with some of the agreements they had. And so that's why you see this spike this drop in revenue. Always pay attention to the footnotes whenever you're reading any kind of accounting statements or finance statements, because that can tell you more information about what is going on. So they're predicting that their gross and net loss is going to continue to decline over time. And so hopefully we keep on seeing that go down and down and down. As you can see, before they launched their new products, the numbers went way down to 67%. So I expect it to be more in that range once they have all their new products in tow, but that's going to be a while. So we can expect this number to stay around this 72 to 73% for the next couple of quarters as they launch new products. So Lemonade expects that this year they're going to make, after the first quarter, they're going to make $21.5 to $22.5 million. A lot of analysts thought it would be a lot higher. And then for the full year, they're expecting it to be about $114 to $117 million. For a lot of people, that seems low. That's why a lot of people sold out and they're like, we're done with this stock. But for me, that's more in tow, and it's kind of more reasonable as an expectation for them. So anyway, that was basically everything to do with the shareholder letter. Everything looked good as far as everything that happened in 2020. It looked good. So now let's talk about the notes from the earnings call itself. So the first thing that I took note of from the earnings call is the fact that, did you know that a quarter of customers for Lemonade is in Texas? Which means that due to one of the reasons why there was also a revenue drop, or they're expecting a revenue drop to just be between 21.5 to 22.5 million for the end of this first quarter, is because they have to pay out a lot of claims to customers in Texas. I didn't know they had that many customers in Texas, but it was interesting to hear them talk about it. So that whole ice storm really affected Lemonade. Now that makes me also question, and that's something that I'm going to be paying attention to, is how effective and what kind of customer service did they offer to customers in Texas, and how well the customers enjoy their service compared to when they're talking to their friends and saying, hey, I have Lemonade insurance and they paid out my claim like this. And their friend is like, what? I'm still waiting for State Farm to pay my insurance claim. So that's the thing that I'm going to be paying attention to in social media and all that stuff, to see how are people still talking about Lemonade? Are people still excited about Lemonade, or was Lemonade not able to keep up their promise of about a 3-minute claim reward, or being able to pay out those claims in 3 minutes or so? So it's going to be interesting to see how that plays out for Lemonade. And then the next thing that I'm paying attention to is cross sales. Cross sales is a huge bet for Lemonade. It's the reason why is basically how they're able to grow their premiums, their customer premiums, that in-force premiums we talked about. How often are they able to continue to do that cross sales? And then that also brings up the question of, at what point is Lemonade going to offer some other things? I know one of the reasons that a lot of people have not switched to Lemonade is there's not a car insurance policy available. I know a lot of people who would love a bundle of home, renters, and car insurance, or something of that sort. Because one of the reasons why a lot of these other insurance companies are able to keep you is that bundle. So Lemonade right now is sending a lot of customers away. So we got to see what they had to announce. And they didn't announce anything during the earnings call. They said, stay tuned, which is like, stay tuned, foreshadowing, all that good stuff. That was another thing that I noticed from the call. The coolest thing from the Lemonade call was the fact that they actually spent time answering retail investors' questions. They actually had a platform where people could submit questions to the CEO and to all the C-suite officials of Lemonade, which gave the small guys like you and I an opportunity to actually hear them answer the questions that we have. And so that was really, really dope. The only other time I've ever seen anything like that was during Warren Buffett's and during Berkshire Hathaway's shareholder calls, the annual shareholder meetings. That's the only other time that I've ever seen any company actually take questions from, whether it's randos on the internet or just people who are invested in the company. Just anybody could ask questions. So that's something that I love. Now, of course, there were 3 questions that were pulled out to talk about. The first one was about Bitcoin, and if Lemonade was going to invest in Bitcoin. Of course, the answer was no, but they said that they are excited about the opportunities that DeFi, decentralized finance, brings up for Lemonade. And with the blockchain, I don't know what that means. He kind of left it very open-ended when he was answering that question. So we got to stay tuned to see what Lemonade has in store for that. And then they asked about growth outside of the United States, growth worldwide. The way they answered that is Lemonade sees itself as a company that is going to insure all over the world. As you guys know, or in case you don't know, Lemonade was actually founded in Israel, in Tel Aviv, and they have an office in Tel Aviv. So they're going to be expanding in other places, but right now their focus is in the United States. And then they had another question that was pretty interesting on Tesla's autonomous vehicles and how ride sharing is affecting the bottom line, or will affect the bottom line of Lemonade. They said they're watching it, and it sounded like they have something planned with this whole thing, but they didn't really say anything specific to do with that. And then finally, the outlook that they gave, which is something that a lot of people didn't really tap onto. The outlook they gave for the end of this year does not include any of their new products because they don't know how those new products are going to function. So that's the reason why you have to listen to the earnings calls and listen to the question and answer segment. So this number that they gave us, this 114 to 117 million that they expect at the end of this year, it probably will be higher once they announce those other insurance policies that they're going to offer. And then I love the fact that they reduced their spend on advertising, but they were still able to capture a lot of new customers. It shows that their brand, like I said earlier, their brand appeal is growing and growing and growing. But apart from that, that's basically everything that I got from the call. Now, my thoughts on Lemonade, like I said earlier, I have basically 3 questions that I have for Lemonade. One is, was a lot of that growth accelerated due to COVID-19, or were they already growing that fast? And then because we all know a lot of people got pets during COVID-19, and a lot of people bought houses during COVID-19 trying to flee from the cities. And then the other thing is, what was the full effect? Like I said, what was the full effect of the ice storm and paying out those claims? So I'm going to be really, really paying attention to Lemonade's Q1 earnings report. And if you guys are still around, hit that subscribe button so you don't miss that one. But anyway, that's all I got for y'all as far as this whole breakdown into Lemonade. What do I think before I get out of here? I think in the long run, I still believe that Lemonade, especially because it's acquiring customers from an age where they don't know much about insurance, and insurance has always been this like shrouded industry. Lemonade is removing that cloak over the industry, and it makes it a lot easier for people like me. I mean, look at their logo. It's pink. They literally pink. So it makes it a lot more interesting for people like me to not feel so intimidated getting into the company. But anyway, that's all I got for y'all. I hope y'all learned 1, maybe 2 things out of this thing. As far as valuation on Lemonade, I still think that it's still a little bit highly valued, because if you look at their price to sales versus the competition is about 0.7 to 0.8, and Lemonade is trading at about, I mean, now it's probably about 60. That's extremely high, but we'll see how that goes. I think a lot of it is because people see it more as a tech-focused company than as a regular company. But we'll see how that goes moving into the future. I'm hoping Lemonade keeps falling so that people who don't want to be in the company long-term get out, so that I can get in at a better price point. But I believe in this company in the long term. I've had arguments with some people about it, and they've told me their differences. Always good to listen to differences. But now I'm rambling, so I'm going to catch y'all on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and I'm out. Peace. Whoosh.